Hey, trading fam, Chris here from Mind Bloom Exchange, and from another follower that wants me to look at gold, and that is what I'm doing. Hopefully, this is going to be a little bit more in depth. I'm going to go back to the monthly, weekly, and all the way up to the 4 hour. So probably over 10 minutes. So if you got the time, take it. If you don't, probably skim over to probably the later section, and you can sort of see the end result there, where I have what I'm, the thesis is of what I'm trying to, showcase in strategies on what possibly could happen going forward. All right, enough with the chitter chatter. Let's get into it. Pitter patter. I'm rhyming today. It's good. You mean it's a good day when you can rhyme. There you go. Or maybe not. I don't know. If you can rhyme, awesome. If you can't, well, I'm sorry for you. So based on this market here, if we do a quick fib projection here, it sort of stops us out here. I'm going to actually find us a better, see if we have more data. There you go. That's better. There we go. We got heaps more data. As you can sort of see, look at this. Beautiful. First run, correct. Second run, correct. Third run. So 1, 2, 3, 4, 1, 2. I'm expecting, and then somehow a pitter patter, maybe a correction down, and that's just a quick. That's a quick overview. Now let's get into the nuts and bolts of this market here. Being that we're in the monthly, first things first is we run with pitchfork as well as fib projections, pitch and retracements, and from there, I actually haven't looked at gold personally for I don't even know how long. So that's the first level here is this one right here. Now if we do an extension on gold, we go to here. Why am I not surprised that gold is reacting off of this monthly level? Example, we got our level. Look at this. Take our level here, take our top here, and we get here. And I haven't looked at this since 2 minutes ago. So yeah, it's the strategy really works, and um, I'm actually really excited actually for gold. So that being said, the other thing that I wanted to sort of look at is bringing this market down a bit so we can run a fib from the past, or pitchfork from the past. My apologies. And the reason why is I really want to just see how this market really correlates up. The past can give us details on our future, generally. Not always the case, but sometimes the case. Sometimes you can go even there. That looks nice there, and perfect. All right, so we got that level there. As such, now let's scroll all the way up. And you already know that this market is not, that fork won't be really touching it. So we'll have to make our next fork up here, which we will do right now. And we will go perfect. Now, that is the levels that I'm seeing. Now I'm going to do another fork right here and right here. That's interesting. Cool. So based on what we're seeing right now, we'll jump over into the weekly to get a little bit more data. And then from there, it looks like possibly that this market hit the median line and is now possibly driving up. And if it is driving up, what levels are we going to? Well, the first level that I see is 2,900, and the next level I see is 3,000. And then the max level I see before another massive correction could take place would be just a touch over 3,065, give or take. So that's sort of on our way for the levels up. Now, are we going up? That is the question, and that's something for us to figure out. You mean we hit a massive monthly level, right? So we hit this massive monthly level. We corrected on here, which is the median line, and now the question is, are we going here or are we going here? And this is hopefully in our discovery, we will try to figure out what the information provided. So that's not bad. See, when I did a 2/1, so taking the top to the 50 to the bearish candle right here, that gave us this level here. So that correlates with the median line right there. So that's interesting. And from that point here, I'm going to make that a 1. So based on that alone, and then another fork, okay, now we're jumping into daily. And actually, before we jump into daily, ladies and gentlemen, I will do a fib retracement. And why will I do a fib retracement? Because I think it's important to make sure that we have levels put in place so that we're not lost. Having levels always allows you, having levels is sort of like your roadmap to the market moving forward. So perfect. And as such, now, big key factor here, if you do or understand price action, this was our top, right? And this market didn't break that top. That is a, I guess you could say, red flag or a market indicator to me. That's possibly, if we go across here, based on anything under here, to me is bearish in that level. To me, anything above this line here would be bullish in my perspective, I guess I'll say that. So being that 1, 2, 3, so that's where I'm sort of, it's a bit tricky right now because it could play out either way. So, and actually, you could say it's a touch taller as you looked at the base, right? So if I zoom in here and I'll show you what I'm saying. See how the base of this candle is still a touch higher than this? So technically, in price action just alone, it's higher high because it's higher than this one, lower high, or it's as a higher low. My apologies, higher low, higher high, and it's higher than that one. This one is a higher high, and this one could be another higher low, and then we could just keep going up. So for us to figure out whether we're bullish, bearish, and in anything in between, I would probably say that putting everything into a nice little box makes it smarter. So what I mean by that is anything that breaks up above 2718, we'd be looking at the next level, which would be 2789, and then the next level of resistance would be 29s to 2900, and then 3000, give or take. So I'll just simplify that even a touch more. So the way this market could go is that way, right? So we break up to higher highs at these levels, or, right, to me, if we break these lows here, then what could we see? Well, let's find out. The first low, or the first level down, let's make that a 4. So, and then from there, we can go down to 2400. So the strategy moving forward, or the if-then scenario, is if we break 2700, 2721, these tops here make a higher high, then the probability of us going to 2900 or 3000 would be validated. If we break the 2600, the next step on is 2500, and if we can break through the 2500, we have 2400 as our correction down, and then we can go possibly looking up from there. So like I said, you got one level here, and then the next level is here. And it can go lower. I'm not saying it won't. Just like the gold can go higher. In this instance here, this is sort of what I'm seeing at this moment in time. So I think putting a marker down, putting an alert on the 27.34, and putting an alert on 2600, and then from there waiting which alert signifies you or signals you so that you can get into the market and look for the perfect entry. That's how I'd play this market. If you want to know more, I'm doing a Q&A this evening, 7 p.m. MST. Send me a DM if you're interested. More than happy to go over any other charts, what I do, how I do it. And the goal is to, everybody to win and get some value. But overall, moving forward, this is what I'm sort of seeing with gold. And yeah, any questions or any charts that you want me to look at, or any stocks, cryptos, altcoins, metals, copper, etc., let me know, and I'm more than happy to do that and make a video for you, and for you and your eyes only. There we go. Take care and have an awesome day.